Okay, let me now talk about support and resistance, or supply and demand. That's same thing. So here uh, it's a chart. Let's say this is the chart on your phone or on your computer. This is the price. Here we are using NAS 100, NAS 100, or let's call it NASDAQ. That's the common name. So this is the price for NASDAQ. This 10k, 11k, 12, 13, 14, 15, 16, 17. And in this case, let's say the market is standing at 11k. Here is the price. So what do we mean by saying support and resistance? Because I told you already that there is only two movements in the market. There is down and upper movement. So the market here, let's say the market pushes up and it comes to 12k here. Just follow the lines, please. And when it hits the 12k, the market comes back at its previous what? At its previous price at 11k. Okay, what do we conclude, or what do we call this? What do we call this? We call it, this one, the market formed a triangle, because if you cross this here, it will give you what? A triangle, because the market is moving and there is different forces, especially NASDAQ is the one that respects support and resistance. So the market here, if the market did not break through here at this point, if it doesn't go down this point, and it goes back here, we call it what? The market is doing a zigzag structure. So where it moves up and down like this, but in a form of a zigzag, forming triangles. Because now we have what? It's a trapezium, but in this case we don't use such names. We only have triangles, cycles, and yes, and cycles in the market. So if the market comes in and because it only, let's say it stop it from when it comes back at its previous price at 11k, it bounces back again to 12k. What happens to this 11k? We call it what? This one is our what? Support. This one is our support, because the market is not going below this level. It's being supported here. So this one becomes our what? Our support. So, and if by any chance again the market gets rejected here and it comes back to our support, our previous support, we call this upper trend, upper levels here at 12k is what? Our resistance, because the market is trying to go up, but it kept being resisted at this this level here at 12k. It's being resisted. So this becomes our resistance, and this becomes our support. How do you place such, or how do you trade a market in this structure? So what you trade here, you have to wait. If the market goes here, you keep quiet. You just keep quiet and look what happens, and comes back here. So here it's when at support we only buy, because you'll be like, okay, the market again give us, let's say the market have given you a candlestick that looks like this, you see, or it came down like this, because it came down like this, and at your support here, the market gives you what? A candlestick like this. This one is a hammer, and it giving us what? A rejection, that the market will go and test again the resistance. So what do you need here? It's after this candlestick, after this candlestick, you are what? You are buying the market. So here you have to buy until it reaches what? And this one is your resistance, and this is support. Here you have to buy the market here until it goes back where? It goes back to your resistance. because the market has come from the resistance, comes at the support, and it gives you a rejection candle. This is the confirmation candle, telling you that the market is, if the stick down the candle is longer than the one above, that one is a confirmation that the market is being rejected down, so it has to change directions and go up. So you have to buy here and wait. Once the market hits here, here you can put what? Your take profit. And just down here, down the candlestick here, you can put your stop loss. Because if the market comes down by any chance and break through the support, that means it's again looking for a different structure. So once you put your take profit here, you now have to wait whether the market will break through your resistance and try to start a new structure with different price. So once it breaks through the resistance, you leave the market because you already bought here, down here. So once it breaks through, you have just to wait and move your stop loss at the break even here, where the market break through your resistance, because that one is again what? A different structure. The market will hit a high, a new high, I mean, and it has to come and test back the previous resistance. And once it bounces at the previous resistance and go back, this resistance is no longer what? This level is no longer a resistance, but it becomes our support. And new resistance comes here if the market bounce back to come at a previous resistance or our new support. Once it bounce back, you have now to, on this case, you can sell the market at our previous resistance. Once it bounce back, you have to sell if you are given what? If again the candlestick is a rejection from above, and you have to do what? To put your stop losses. Stop loss is actually what? A level where you think if the market goes below it, it will do what? It will never come back, so it gonna form a new structure, and you don't want to lose more money holding on to negatives. So here, if you get again a rejection candle, you need to sell the market, because on your previous, I mean on your new resistance up here, if you are given a candlestick like the one here, but at least the long side, the long thin side of the candle is up and here it's down, you are what? You are selling the market. You are selling, and you are expecting the market to come and test what? Your previous support, I mean your new support here, because the previous support is this one, and the market break through the resistance, form a breakthrough, comes back at the resistance, it goes back, this become our support, and if it bounce back here again, this becomes a resistance, and this what is a new support. So you have to sell the market if you are given a rejection candle or a confirmation candle that the market will continue going up. And just make sure when it bounce back, when it bounce here, the moment it bounce here, you have to close what? Your previous trades here, you have to close them. And these candlesticks, they happen in different time frames. We have 1 minute, we have 5 minutes, we have 15 minutes, we have 30 minutes, 1 hour, 4 hour, a day, and 1 month. So meaning that the good time frame to trade, the higher the time frame, the accurate the signal, and the accurate the market is. So what you need to use here is from 1 hour to 4 hour, or your entries you can get them using 15 or 30 minutes. So if on 30 minutes you are given a candlestick like this, and on 1 hour you are given another candlestick like this, that is a strong confirmation that the market is being rejected, and you should sell on the market price. Where do you put your stop loss? I mean your take profit at your new trades, at your sales. You put your take profit at the new support. Like if the market hits that level where you put your take profit, the trades will close themselves, and you don't need to do anything. It will just close themselves, and you'll be able to see your profits when you come back. Because for you that work, for people that works, it's good once you get your candlestick like this in the morning before you go to work. So you place your trades, you place your buys, you put your take profit here, and you'll be able to do what? Wait, you don't need to stress when you're at work, or maybe yeah you need to think about the forces that might turn back the market, and they can go into your opposite your direction. That's why here it's advanced to put what? Stop loss just below this, because once the market breaks through this confirmation candle, once it breaks through, it has to start a new structure down. And if it break through what your resistance here, it has to go form a different structure above. That's what we call support and resistance. So on the chart, we will go back to the chart, and I'll show you how to place your take profits and your stop losses. So let's just look at the chart quickly. If you come here, the other trade is still running. We are it's still in profits, and let's say this one is a real account. You can check here the candlestick that I was telling you, the rejection candle and the confirmation for a buy. If you check nicely here, if you check this candlestick here, the thin part of the candlestick is long at the bottom and short above. That means the market is being rejected here, and you are expecting what? You are expecting a buy. The next candlestick, because they might be two, these ones are just forming a morning star. So meaning here it's kind of like an upper rejection, but the market is what? It did not reach any of this level here, because this means what? The market is still pulling up. It's pulling up. That's why our entry, the market is still above our entry. That's where we are what? That's why we are having profits here. If it was negatives, this could be in two negatives if the market was below our entry. So how do you place your stop losses and take profits? With the phone, you just go to modify, but with this one, you just double click. You just do what? You just come here. You don't double click. Sorry. You just come here at where it said stop loss, and here it says what? Take profit. Our stop loss, if you click here, you'll be able to you have to come here, double click, stop loss. The computer is very slow. I want to show you how to place your take profits. And take profits, and it's now slow. Our network is very slow. Okay, but what you can do here is, what I mean by stop loss, you are placing your stop loss. Your stop loss is it's a point where you say, okay, once the market goes a certain pips from my entry point down against it, that level, if the market reaches that level and it's giving me a direction of maybe or an indication that is going to form a different structure against me, so that's the level where you put what? You put your stop loss. Let's say like I said, you always put it below what? Below your rejection candle, just there. So once the market break through this, it's no longer going up, but it's going to form a different what? A different structure down again. And what do I mean by what? By setting your take profits. You do what? You move your previous high. Like in this case, your previous high where the market changed directions was, your previous high was this level here. Sorry. Your previous high was was this level. Sorry, your previous high was this level. This is where the market changed directions. So your take profit, you are putting it where? You are putting it here. So this is where you are placing what? Your take profits, or depending on how much you want to earn from that trade. You can decide, okay, no, I don't want, because the market might, something can happen during the upper movement, and it can go maybe crash and it goes against me. So you can decide, okay, I'll put it here so that I don't need to wait for dramas that might happen in the market. So that's what I mean by take profit and stop loss. I'll give you a screenshot, I mean a screen record of what the market I mean of how to place and of how to place stop loss and take profit. So that's support and resistance. So let me just record on, because that was on a paper. I will just quickly take you through with on a chart. So I'll just do it in the next video.